A Thursday judgment by the Privy Council in the UK could lead to billions of dollars in liability for the Jamaican government. The case in question dates back about 3 decades when Eagle Commercial Bank Limited debited a total of over 15 million Jamaican dollars from accounts belonging to Jamaican businessman Y.P. Seaton and his companies, 4 of which were foreign currency accounts in his name denominated in US dollars. A total of 428,000 US dollars was debited from those foreign currency accounts and a certificate of deposit held by Seaton. In 1992, that amounted to a total of about 9.2 million Jamaican dollars. In 1993, the accounts were frozen, and the bank asked the court to decide that it had been entitled to take the money from Seaton's account. The money had been paid into those accounts in error, said Eagle Commercial, and they clawed it back after Seaton refused to voluntarily return it. The bank told the court that Seaton, through one of his companies, was an agent for an international company, Prolacto, which sold milk. That milk was sold to the Jamaica Commodity Trading Company. JCTC and Seaton held accounts with Eagle Commercial, and the bank says it mistakenly paid sums into Seaton's personal foreign currency accounts that it had debited from JCTC as payment for Prolacto's milk shipments. Seaton countersued, the claims were consolidated, and after a trial before then Supreme Court Judge Brian Sykes, which began in 2011 and took 15 days stretched out over 2 years, the court found in Seaton's favor. At the time when Seaton's accounts were being debited, however, Jamaica's financial sector was building up to a crisis point, which by the middle of that decade had led to a financial collapse. The People's National Party administration, at the time led by Prime Minister P.J. Patterson, decided to rescue the sector by, among other things, creating the Financial Sector Adjustment Company, FinSAC, in 1997. FinSAC began buying up equity in troubled banks and insurance companies, including Eagle Commercial Bank. In 2000, Eagle Commercial merged with several other distressed banks to form Union Bank of Jamaica. In 2011, RBTT acquired Union Bank, and the new entity was named RBC Royal Bank. Justice Sykes, now Jamaica's Chief Justice, ordered RBTT to repay the over $15.2 million it had taken from Seaton's accounts and to pay interest calculated from 16 October 1992. For the foreign accounts, the interest was ordered to be compounded at the rate of 27.3% from 1992 to 2014, the average rate for borrowing Jamaican dollars over the period. Justice Sykes believed that simple interest would not be adequate compensation for the loss of the use of the funds. In 2014, Sagicor Bank acquired RBC Royal Bank in Jamaica, and thus that was the entity against which Seaton's case was now proceeding on appeal. The Court of Appeal, in its January 2019 judgment, set aside the order made by the lower court judge and instead ruled that the bank should only have to repay $9.2 million, the amount denominated in local currency that was deducted from Seaton's foreign currency accounts. His claim, the appeals court ruled, did not extend to his company's accounts. And instead of the compounded interest, the appeals court ruled that simple interest would instead be paid, calculated at the same rate of 27.3%. Seaton received permission to appeal to the Privy Council in 2020. Having dropped his claim to the rest of the money that was taken from his company accounts, the matter to be decided before the Judicial Committee of the Privy Council was exactly how the breach against Seaton, the debiting of his foreign currency accounts so many years ago, would be remedied. Compound interest or simple, and at what rate? Ultimately, the Privy Council ruled that the best way to remedy the situation would be to conduct an accounting exercise that began by restoring the funds in Seaton's foreign currency accounts and his certificate of deposit to what they were on May 7, 1992, before the debits were conducted, a total of 428,000 US dollars. Then the exercise would roll the years forward without the unauthorized debits, with interest, withdrawals by Seaton, and payments by the bank converted to US dollars calculated at prevailing rates during the period being accounted for. The interest on the cash accounts would be compounded monthly, the Privy Council ruled, at the average annual rate as set by the Bank of Jamaica, with interest on the CD being compounded on a quarterly basis. That's interest compounded either 4 or 12 times a year, every year since May 1992, on US dollar figures against which the Jamaican dollar has depreciated significantly over the years. Local press reports on the issue are calculating the total sum to be repaid as somewhere in the region of $20 to $35 billion in local currency. However, Sagicor says it's not on the hook for any of that money. The Jamaican government will have to repay Seaton once all the interest is calculated. That's because, as part of the share sale agreement between FinSAC-controlled Union Bank and RBTT, FinSAC reportedly provided RBTT with full indemnity for all losses and costs accruing to RBTT as a result of any litigation against the bank it was buying. That apparently included litigation against Union's predecessors, one of which was Eagle Commercial. Sagicor has already issued a press release seeking to reassure clients that the bank has no financial exposure as a result of the Privy Council's decision. According to the statement from Sagicor Bank, the indemnity was dated 5th March 2001. Local press outlet Nationwide News reported that an affidavit was filed in the lawsuit between the parties by former Financial Secretary Devon Rowe in 2015, which supports the fact of the government's liability. Nationwide says current Finance Minister Dr. Nigel Clark has indicated that he needs to be advised before making comment on the matter.